As I mentioned, this is a very important video that I encourage all Supreme members to watch because I have changed the track record and journal for you that I'll be sending today in the next video and in the next email, where you'll get the link to the video and you will get the link to the new track record. And the reason that I've changed this track record is because I wanted to relate more to your portfolio than a previous portfolio. And we're going to do it on a month-to-month basis so that you can track your own portfolio's results. So let's start off with the weekly analysis. And as you know, with the weekly analysis, I grab the GAN box. We grab the high and the low. Apologies. Let's try that again. So we grab the high and the low of the previous week to see what the bias is. So last week and 2 weeks ago, the bias was bearish and the market crashed. This time, the market is bearish. And the reason is because the price is below 0.5. If the price breaks above 0.5, we would enter into a bullish bias for the week. So right now, you can see the market is trying to make up for a bit of its losses from last week, but it is bearish, okay? If we look at the bigger scheme of things, we can still say that it is bullish. So we will be looking for longs in the market, even though there is a bit of volatility. So the whole sell in May and go away, if we look at the entire May's movement over here, you can see that the market moved up, closed down, and it basically closed where it opened. So May was a no-go month for holding positions in the medium term, okay? And now it looks like it's testing the resistance of this W formation, this large W formation, and we can throw a long position if you wish over here. And we can put the stop loss below, and we can put the take profit at about 2. There's no magical levels or anything. It's just a risk to reward of 1 to 2. Very important for your diary. A high risk to reward leads to a lower win rate. A lower risk to reward leads to a higher win rate. So that is the inverse relationship, an inverse correlation to it. So because we have a 60 to 70% win rate, our risk to reward is 1 to 2. Okay? If we made our risk to reward 1 to 1, you would see that the win rate would be from 70% up to 80 to 90% certain months. But remember, we have costs to deal with, right? We have interest to pay, and the market has to make up for the points beforehand. So that's why I stick to a risk to reward of 1 to 2. So the bias in the short term is bearish. We're going to test this resistance. If it breaks below, then it'll be a fake out, and then the market will come down. So you can see here the medium probability trade. And why I say medium probability instead of a high probability is, one, the price closed below the 20-day moving average, and it's above the 200-day moving average. So it's medium probability regardless. The fact that it is a Monday, which shows that the trades are less likely to work out, is a way to say, either I'm going to risk less, 0.25% of my portfolio, or 0.5%, whatever you're trading, and I'm going to either take it with a pinch of salt with these medium probability trades, or I'm only going to look at high probability trades. But it's all within the stats. So if we go, so we've dealt with the weekly bias, we've dealt with the daily bias, and we've dealt with the overall analysis of the JSE. Now I want to show you something very important, and that is I have changed the track record and journal numbers so that it relates more to your portfolio. Okay. So if we go here, Multi-Trader Supreme Service Trading Journal. All right. This is the HPT. So I can write it here, the HPT. And you're going to get this journal shortly afterwards. You'll click on the link and you'll download it. And you'll see that there are now black lines within the journal. Now, what that means is that we are starting with 100,000 Rand portfolio. All right. So I'm taking the average portfolio that the members have subscribed to or have used. Later on, as you get more experience, as you deal with winners and losses, as you deal with the experience of Supreme Multi-Trader, you can pump up those numbers in the millions, and then you can bank a very good return per month. So for now, it is all within the conditioning period. So you can see here is a 100,000 Rand portfolio. A month went by, and then we started with 100,000 Rand portfolio instead of compounding. And the reason is because you want to see how many points did the market generate? And then you can put your own portfolio values to see how it would have generated your performance. So there is profit and loss excluding costs. Now, the only costs that we have to deal with in this case are those 50 points that we get in and 50 points that we get out. So if we grab this, you can see that that month made 3,423 points, or 3.4% of your portfolio if you started with 100,000 Rand. Including costs, you can see that the return was 1.3% of your portfolio, including costs, or 1,323 points. Moving to the next month, you see it started with another 100,000 Rand portfolio. We're not going to compound so that we can base it on each month rather than the previous months. So you can see the next month, there was a 11,566 points return, or an 11.5% return on your portfolio. Including costs, it was 6.9% of your portfolio. Where do you get those kind of returns where you're getting 5%, 6% per month? Very difficult. And this is realistic trading, so you can base it on your own. The other thing is that now that we're becoming a little bit more experienced with Supreme, we can pump it up to 1% of our risk per trade. And the medium probability trades, you can either trade them or not, or you can risk 0.5% of your portfolio. Okay. So if we go to the MPT, you'll see that this is where I send out the medium probability trades. I do trade them on my own portfolio, but I risk 0.25%. Okay, very little. And it's just for your understanding of how medium probability trades work and why they have less likelihood to work out. So if you see here, 100,000 Rand, 100,000 Rand, 100,000 Rand. The first month you generated minus 1.4%. The next month you generated minus 1.9%. All right. And I'm looking for good medium probability trades, and they still end up negative. So the more trades that I send out on medium probability trades, the more you'll realize and the more you'll feel that you don't want to take them. And that is a good thing, because you will be prepared for when the high probability trades come out. So here's the HPT stats, the high probability stats. And you can see I've changed it where instead of compounding, it's based on an initial 100,000 Rand portfolio each month. So you can see April, we got 1.3%, May, 6.9%, June, 13.4%, July, 6.2%, and this is net, okay, including costs. And then we can go through it, 3%, 5.6%, 1.5%, 5.3%, 3.2%, 1.7%, 6.7%, 3.4%, minus 1.4%, and then May, we ended up with 1.3% return. So it was a profitable month. We can tick that off the list. It was green, and it's looking fantastic, okay? The only accumulation that you do see is the points rather than what your portfolio was before. So you can see over just about a year and a bit, the return was 58% return a year. And that's why you should not have to worry about winning streaks and losing streaks and all that, because that is just ego talking. And it's also a type of survival instinct that's kicking in. But trust me, when you've taken thousands of winners and thousands of losers, they all lose their significance, and you just see the bigger prize at the end. Okay? Remember, if there are any lessons that you're learning through these videos, write them down in your diary or your journal or your anything, your notebook. So we can see here, real trade, April to May 2024, high probability, 181 trades, 106 were winners, 67 were losers, 59% were winning. The biggest winner was 1,110 points, and that was last week. The longest set of winners was 8. The biggest loser points was minus 541 points. The longest set of losers was 3. So with 100,000 Rand portfolio, if you didn't compound your portfolio, but compounded the points rather, then you would see that you would have generated a 59% return. The medium probability trades, on the other hand, negative April, negative May, minus 3.9%, minus 1.9%. So yes, I am sending out the medium probability trades to you, but like I say, it's optional. It's not likely to work out. I'm going to keep doing it because I'm trying to improve these medium probability trades for the future by trying to find medium to high probability trades within. But I haven't cracked that system yet. So the high probability trades are more likely, way more likely, to grow your portfolio on a decent basis. Okay? So that was a great covering today. I'm going to send you this. It's called the Much Trader Supreme Index Service Trading Journal HPT New. You will see it in the email with the video. You'll watch it again, write down the lessons. And the thing is, right now, this is conditioning. We're conditioning you to gain the experience of a day trader. We're conditioning you to move from 0.5% risk per trade to 1%. And then eventually, as you get better and as the track record improves and gets more results, you will then pump it to 1.5% per trade, 2% per trade. Will it ever be more than 2% per trade? I doubt it. I've never risked more than 2% per trade. And that's just an emotional element of my trading, because you do know that there will be losing streaks of 4, 5, 6 trades in a row, and that's 12% of your portfolio gone. So I'd rather reduce the risk rather than increase the risk for the performance. So now you know that when I send out medium probability trades, I say optional for a reason, because they are less likely to work out. If we look at the medium probability trade right now, okay, it's in the money. It's also at around entry, but in the bigger scheme of things, they are less likely to work out. So rather risk less with medium probability trades. Okay. Do we have any questions? We've covered a lot today. I hope this has helped you a lot. Let me know in the chat